Hey traders, happy Friday everybody. Hope everyone is doing well. Good to see you all. All right, welcome to our Friday, March 12th episode of Charts and Coffee. All right, so let's get to it. I want to jump right into the questions here. And a quick reminder before we get started that those of you that are in my Sector Secrets Mastery, remember that we have our weekly Q&A watch list text session, all of that covered, immediately following Charts and Coffee. So I'll see you in the chat room then. All right, so to kick things off, we've got GE and NEO. Okay, very cool. Let's jump into that. You know, it's really interesting about NEO. And in terms of even GE's been a really neat narrative in terms of talk about a stock that's sort of, Maruf, talk about a stock that's sort of come back from nowhere, it seems. And I like low price stock. You know, one of the things that we do in, for example, Sector Secrets is we were looking at RIG. RIG is a sub $4 stock. So yeah, there are options. It's a very liquid options chain, but you can also buy the underlying. So we can play two different narratives with buying the underlying stock in certain situations. This is a situation where, for sure, I would focus on pullback buys, getting long calls, playing that directional debit. That's what a long call is. But at the same time, I've got a long position in my portfolio, slightly longer term portfolio with GE in it, at $6-7 a share. Same thing same mindset I had with Ford way back then. Don't put the time horizon restraint of the call on some positions that you think really could continue to move up higher. And GE is an interesting pullback buy. The timing, though, heads up on this move. See that right there? I do anticipate that usually about 2-3 days after dividend date, we tend to see some weakness. Okay, that's not unusual. We will sometimes see some weakness just in front of that. So with that being said, let's see, because of the scale of the movement, see how we had we had a gap down 3 times in a row. Let's wait for an inside day or a minor low. And then I think GE could be a really interesting long at that point. And remember, that inside day is still going to be perfectly good for the long calls, or if you wanted to do a call vertical, etc. That's perfectly fine. So NEO, I would leave alone for now. NEO is enjoying a technical bounce. You can see that there off the 200 exponential. That's what these white dots are. I use a self-correcting exponential moving average. It's called Simpler Propulsion. It's a free tool. It's available free on TradeStation. It's available free on TradingView, which is what I'm on right now. I use TradingView a lot in Sector Secrets, mainly because it's got a lot of cool tools and it's accessible to everybody, regardless of who you execute through, because it's a web-based platform. And what I love the most is that it works on this little thing. It works on the phone. My charts, when I pull them up on TradingView, and I'm on this all the time. So I've been watching, here we go. I've been watching SNDL, right? So I can pull up SNDL exactly with my indicators right on my phone. And what's really cool is that most platforms will allow you to execute trades, which is great. I use Toss and Tasty and TradeStation apps to execute my trade ideas. But I use TradingView to track because I don't want to be necessarily tethered to this all the time. Anyways, I bring that up in terms of 200 EMA in the propulsion is because this is a technical bounce off an indicator that I'm not going to find on other platforms as easily as I would. Again, TradeStation and TradingView are super easy. In the TradeStation app store, you can download Simpler Propulsion. And in the TradingView indicator selection, you can grab propulsion. So that's really handy. And that's exactly what it bounced off of here. Yeah, so I think it's more of a technical bounce. I do like GE a little bit better. All right, moving on to our next question. Oh, sorry. There we go. Steven, I'll get to your question in just a minute, Erkan. Donkey Kong, DKNG. All right, take a look at a DKNG, DraftKings. I like DraftKings. I think that, I was listening to Kathy Wood talk about DraftKings Not that that's the only reason to be in a market, but look, I want to hear people who are transparent about their positions and their position sizing and knowing that there's flows. Gang, everything we track. We can talk about macro and we can talk about technicals and whatever else is going on. I don't know. Are people still delusional enough to look at PE ratios? Is that still a thing? But at the end of the day, it's all about flows. Institutional pension, these giant flows going into different places. And so, yeah, Cathie Wood would be one of them. So, as far as I'm concerned, in terms of attention and where strength might be coming in. That said, DraftKings is a really ugly grind higher. I think if you're going to play DraftKings, you've got to have a higher risk tolerance. DraftKings might be one of those names, not because of the cost. I usually like using a put credit spread in higher cost stocks because the credit's worth it. But then again, the offset is expensive too. But I think in more expensive names, put credit spreads make sense. You just start to trade off as a credit. I don't mind starting a $58 or $70 stock off as a debit. I know that the options are not going to be extremely cost prohibitive. I'll probably go with a call vertical. The reason for that is look at the frequency with which we break the validity of the trend, whether you're looking at the wave as I do, the 34 EMA on the high, close, and low, or whether you're looking at the 55 EMA as I do. I like my exponential moving averages based on Fibonacci levels. I love that. I've been doing that for a long time. I tell a story in my second or third book where I'm down in the Keys with my husband. I'm trying to get some trades off. And we're at a restaurant, being married to a trader. And for whatever reason, I had not imported my indicators. So I thought, my gosh, what am I going to do? I laid one day, maybe I'll show you my lazy days lines layout. I laid out all the Fibonacci exponential moving averages, and it turns into this giant, huge wave, a tsunami, if you will. And I have that layout here on TradingView, but back then it was on eSignal. And it's amazing how often the market is going to respond in a parabolic environment to an 8 or a 13, in a more normal vanilla type trend to a 21 or a 34 and a 55. In really volatile pullbacks, it might adhere to the 89. It's amazing how much you can get. I even put the 144 and the 233 out there just so I can get an idea of the kind of range we might see. So it's a giant exponential moving average super wave, right? I call the 34 EMA the wave, and that's really where I found the market tended to bounce to the best, right? In most trending situations. And so DraftKings not adhering to that, although clearly it's trying to move higher. It's vacillating between double green and green yellow. So I would think a call vertical might be a little better here, offset the cost, increase your tolerance for potential loss, and think bullishly, but just not up at these highs, please, just not up at these highs. Wait for those ugly blue candles and those giant wicks and take advantage of those pullbacks. So thanks for that. And the other one is CVNA. Sure. I would leave CVNA alone. I mean, if you want to look at an oversold buy, that's fine. But I would probably put it lower down my list of things that I would look at. Okay. All right. Next up, Brandon, what are my thoughts on the bond yields for growth stocks? So the bond yield, sorry, I got something in my eye this morning. What would I think of the bond yield for growth stocks? Well, Brandon, I look at it this way, and it's not going to be a direct play, but it kind of goes back to that flows conversation, which is if bond yields, if you're looking at the 10-year, the 30-year, whatever it is, tend to, where the narrative's been, and it continues to drop, by the way. But if you look at the bond yield, what it is, talking about flows, is that you've got certain market participants, giant market participants, that are finally looking at a 1.5, 1.3, 1.4, 1.5, 1.6 yield that they can lock into, as opposed to the uncertainty of the equity markets. And so you're going to see, I think, the competition for me is usually, will someone say, yeah, I'll go with bonds as opposed to your dividends, your aristocrats, even some of your newer aristocrats. because that's kind of a saying that's a yield play. So I want to make sure I'm comparing apples and apples. I think you're on the right track, but I just need to see then proof, right? So I might have a narrative. I might have a hypothesis as you do, Brandon. So then what I want to go do is go look at it. Go look at bond yields. Look at when we broke specifically that 1.5 point threshold, and then look how certain stocks responded. And if I can see the evidence in that, then I think, and I've already seen some of the evidence of the dividend stocks, which is why I bring that up. But that's the way I, rather than, I think you're right, but always get to the granular level of which stocks seem to be abandoned. Is it widespread? Are growth stocks, or dividends or aristocrats? Where are they within the perspective of that 1.5 yield? So have a line in the sand in the bond yield, and then look at the way in which certain stocks respond. And I hope that makes sense. So I want to give you something tactical, because I think a lot of us want to put a template on the market and, if this, then this, and that's not always the way flows happen. Like right now, we're not seeing, for example, with the kind of volatility and even the weakness that we saw in the broader markets, we did not see staples and utilities move sharply higher. So that might be usually kind of a knee-jerk defensive play. And yet we're not seeing something as simple as that executed. That means a flow is going elsewhere. So we're always in sort of sleuthing mode to find out, well, if the flow didn't go this way, where is it going? And that's where a multi-sector scan is always really helpful, to look at when one thing zigs, is the other thing zagging, right? We've been doing something completely different, by the way, in Sector Secrets, which is I want to get away from, I'll give you an example. I love the question about the flows there, Brandon. What we've been doing is I said, wait a minute, if I'm in a reflationary environment, of course, Freeport-McMoRan, we've been all over that for a long time now, but even getting a little bit outside the box, and I think someone asked me about it here too, uranium, platinum, what are those narratives that are attached to that? We're long this cute little $15 stock called CCJ. It has good options. It's definitely one that could be played with the underlying stock. And, so sometimes it's really good to think outside the box in that regard, where I don't necessarily want to know where it's an if, then that, if or that, those eat this, not that books. It's not, don't trade this, trade that kind of mindset, trade this, not that. I'm trying to even get outside of that, where I can just look at, does this particular stock care about what this S&P is doing, or is it tethered to a completely different narrative? Is this market really going to care what bond yields are doing? I mean, do you really want to play the rodeo cowboy game of that, or do you want to just get completely separate from it? And you can build the watch list that way. Dick's Sporting Goods. I would have to say, Daniel, that Dick's Sporting Goods is kind of a reopening trade. I kind of look at Dick's and Sporting Goods the same way that I'll look at Nike. They had some really good runs higher, and they just seem to really be struggling. And I think this is why, Daniel, my opinion is that XLY continues just to, we talk about flows here, right? XLY just isn't seeing it, just not getting it done. It's bounced really nicely. Here's, if you're going to put some indicators on your charts, free indicators at that. How many charts have we looked at that were chop and just bounced off their 200 propulsion? I think this is what, the third example, second or third example. So you want to also think about the validity of technical bounces. And I think we're seeing some of those off the 200s, the 200 exponential, 200 simple, 55 EMA, 50 simple. They're all going to be in the same neighborhood. I just like a 55 EMA over a 50 simple. It's not a matter that one or the other is going to make this huge difference in your trading. Just use it consistently and you'll be fine. So I use a 200 EMA, but take a look at how often we keep bouncing off that level. But I would say Dick's is going to suffer the same way Nike is suffering, because of the struggles in consumer discretionary. All right, next up is, hey there, Aircon Gypsy. What is the difference between your Darvis box and the stock one? Oh, like a regular Darvis box. So I call it Darvis 2.0, one, to sort of give homage to Darvis, who inspired the pattern that creates the boxes. But in fairness, we could have called it RARVIS and not DARVIS, because it is a different calculation. We've modernized it. It is the 2.0. It is different. Most DARVIS are looking at 52-week highs, minor lows, candle count. This is going to look at the candle count, minor high, minor low, which is what I like to do. And so, I mean, at some point, I don't know that I have the logic tree handy. I'm happy to share the logic tree with you guys. I don't do black box indicators. You guys will know why the indicator does what it does and is what it is. But as far as the logic of it, it's based on DARVIS, but it is different in terms of we don't need a 52-week high or low to begin the process. So hence I call it DARVIS 2.0, but it probably would have been just as easy to call it completely something else. But it is the way that I automate support and resistance, always. Because I think a lot of times support and resistance becomes something we project. Not that there's anything wrong with pivots or Fibonacci. But if I'm going to look at where support and resistance are, I like looking at where we bounced before. I like seeing where we left a minor low or a swing high or something before. And then I like to additionally see, was there a volume event at that level? Maybe for the day, more preferably at the actual price. And then I'll start to stack more reasons to like it or to ignore it. You know, not every DARVIS level is a significant one, but if it accompanies a major psychological level, a volume event level, earnings, things like that, then it could have more impact on that price it's sitting at, where traders will respond to it. Remember, that's the whole thing. Why do we have all these secret squiggles all over our charts? That David Starr and I, Mr. David Starr, and I have a little joke. We call them all secret squiggles, right? All our little proprietary indicators. Why do we have our secret squiggles all over the chart? Because we have the belief, either because we've tested it or we've used it, that the market's going to respond at that level, because you're looking for response levels. You're looking for decision levels. You're looking for a level at which traders are going to stop and say, oh, wait a minute, this might change my narrative. I want to enter. I want to exit, you know, so that's what we're looking for. That's what we're looking for. Yeah, TradingView is amazing. Yeah, I totally agree, Daniel. And thank you for the question, Ericon Gypsy. And Daniel, yeah, I'm a huge fan. And I don't get anything for saying that, right? I'm not getting anything for telling you to go to TradingView. I've been recommending TradingView since I was doing a lot of Forex content back in, oh gosh, 15, maybe earlier. Not much earlier. TradingView has not been around that long, but they've really improved by leaps and bounds. Every year I'm amazed what more they do. But Forex, and I was teaching Forex since early 2000s, the Forex environment adopted TradingView very early. And now you're seeing stocks, ETFs, futures. Crypto adopted it very early too. So, but I think you're going to see TradingView become increasingly popular in a world of, for example, I have 5 different brokerage accounts. I don't want to have to keep looking at their charts, setting up their charts, hoping their charts have my indicators. I can do all my charting on one platform and all my execution on the other platform. So yeah, I think we're going to continue to see, and gang, you can actually use this for free. There's a free version that is very robust. All right. So I don't want you here thinking, oh my gosh, Raghee's doing an infomercial for TradingView. Use it. Don't use it. I'm showing you what I use. And I think it's incredible. It's going to allow you to get away from the desk. And one of the things that we do in Sector Secrets is that we place alerts. Take a look. Look at all the alerts that I've got here. I mean, I use this. So I get a phone alert, I get an email alert, and I get the most irritating audible alert on my desktop from TradingView. You can't miss it. And if you're not using alerts, you are going to miss trades, or you're going to be glued in front of this computer, which is really not what you want to do. SPY, I'll tell you what, Aaron, I've been bullish equities. You guys know I've never, even during the volatility, said, hey, let's go short. No, I don't hate my money. However, I will say, let's get more granular. There's parts of the S&P that look a whole lot better than other markets. There's parts of the NASDAQ that look better than the other market. There's parts, KRE looks great. So what I'd say right now is, rather than thinking broader at the index level, get just one level below that and get to the sector level. And then below that, you can get to the relative outperforming stock level, or you can do, which I'd say right now, my watch list is probably 50-50, where I'm doing that process in Sector Secrets, but I'm also saying, how do I play platinum, uranium, copper? How do I play reflationary trades that don't care about bonds, don't care about stonks and meme stocks and the Federal Reserve quite as much? They've already set us on one particular path. Copper doesn't care if we do Operation Twist or not, right? They didn't care if they're going to manipulate the bond yield curve, right? Doesn't care. Platinum didn't care. Uranium doesn't care. So corn, I don't believe, is going to care. So I want to get into what I believe are those reflationary honey badger names now. Okay. All right, gang. As always, thank you so much for joining our crew here at Sector Secrets. You guys make it great. Thank you for the questions. I love answering them. I think it's a great way to kick off the morning, and I appreciate the time. Have a great weekend. Be good to each other. I'll see you Monday.